What's up, guys? I know it's been a long time since we've done this, but 2021, as I promised, we are going to get back in action with all the chart stuff, okay? So you can't see, maybe you can't see my left screen, but you can definitely see this screen. This screen's not going to be on. I'm not going to make this video too long, all right? It's going to be about 12 to 15 minutes, but welcome back, everybody. I hope everybody's going to watch this video. And the first thing I want to say is, as per market conditions, generally a lot of people are not trading the first week into January after the New Year's. So I believe this is our actual, if I'm not mistaken, I pulled it up on the calendar. This is our actual first trading week of the year. The first fell on a Friday, but then we had from the 4th to the 8th to kind of get back into the swing of things. So a lot of the people who are, as per the break, they will be coming back on the Monday. Hence why I decided to shoot this video closer to the time when we're going to be in the market. What do I want to discuss first? Right, going towards near the end of the year, we watched all of our pairs, or specifically my pairs, go through a serious change, right? We watched the Euro USD break highs of like 122, 123. We watched the USD JPY hit almost $1.02. We watched the USD CAD plummet to about $1.26. So I was keeping an eye on all these pairs the entire time, but they are now in positions where I had to jump up to the weekly and monthly time frame to have an idea as to where this pair is going to go. Hence, the USD CAD is now in a position where we have absolutely no support or resistance on the immediate day chart. Meanwhile, we were playing off of a lot of the support and resistance on the daily chart for the past almost, you could say, basically year from September, right? Prior to that, we were stuck in a tight consolidation from basically 2018, right? So long story short, a lot of the markets are in a position that they're set to now begin to reverse. Hence the reason why I started to talk about the Fibonacci sequence in the group, and why I spoke about the Fibonacci sequence in a time like this is because at this point, these markets have become very exhausted in the position that they're in, and they're going to look to reverse, okay? So being in a position where the market is looking to reverse, the Fibonacci sequence is something that you can utilize to have an idea of where the market is going to go, or where the market is going to retrace, right? So we use the expansion to figure out where the market is going to get to, right? And then we use the retracement to see where the market is going to, in a trend, retrace and continue going. My idea is this market is now in a position to take a reversal, but a continuous reversal in the opposite direction. No matter how long it takes, I feel it's going to reverse, right? It's the downtrend has been so long and it's so exhausted to a point where I really can't see the US dollar not recovering anytime soon, okay? So, like I said, with that being said, a lot of the markets now, if you notice, you need to jump to a higher time frame, even on the Euro USD, because I'm flipping through my time frames right now. I know I'm talking a lot, but we're about to get into the charts right now. So that's the reason why I brought up the Fibonacci sequence, and we are in a position now where wherever this market decides to go, there's potentially a lot of money behind it, okay? Sometimes you have to be patient. You could have rode this trend going upwards for the USD, whatever it was you were trading against the dollar, okay? The dollar is going to gain back strength at some point. I can't see the dollar plummeting. It's the US dollar. They're not going to let it happen, okay? 4 minutes too long on the talking part. But I just wanted to explain the way we're going to approach things this year, because at this point, the scalping stuff, it's good, but now there are opportunities on the long-term side that you are capable of getting into, and possibly separating a portfolio specifically just for a long-term swing. All right. So without any more talking, I want to get into the charts and show you guys exactly what I'm talking about with the fib, and exactly where these new levels are. Show you the charts on the daily where we can't actually have any more support and resistances, and we have to jump up to the weekly. So thank you guys as usual for always believing in me and trusting that I will always come back and bearing with me when I'm not there. Let's get into it. Okay guys, as I said, straight to the charts, and we are going to start with the Euro USD. Okay, I'm gonna make my chart naked, all right, and I'm just gonna make sure that everybody is capable. I'm just gonna remove these green lines here. Okay, I'm gonna remove these green lines here, and no, we'll take off everything. All right, so as I said in the video guys, a lot of the markets right now are in positions where it's set to reverse. Okay, first thing I want to do, I'm going to pull out my fib expansion. Okay, and I'm going to draw the 100 line to here. Okay, so we could already see with the fib expansion from where I drew the 618 to where I drew the 100 in the consolidation zone here, that this can possibly be the next time the Euro USD actually takes a dip. So we see this zone here, we see this is the 61.8 here, and then this is very close to what happened here on the wick off. Okay, so now I'm gonna jump to the higher time frame to see what's going on up there. And yes, if I jump to the weekly, we are coming very close to a zone where it's reversed before, guys. And on the monthly, it's a potential support line again in this zone here. Okay, so like I said, with every single pair right now, Euro USD, if I go to the USD CAD, again, we're gonna make this chart naked. I'm gonna clear all of this. Same thing, fib expansion may not play a role in this one specifically, but we can jump up to the weekly to see what's going on the weekly time frame, right? Same thing, it looks like it's in a zone, showing a doji on the weekly. So the next week, you never know, the USD CAD can begin to reverse. All these zones have been so exhausted on the daily chart, guys, that we cannot see any more support or resistance zones for information. So what I need everybody to do is, do not go any lower for time frames than your monthly, weekly, and daily. At this point, the market is set to do such a big move that we want to be behind the train. Okay, like I said guys, do not fall away from the weekly and the monthly, especially why? Because these are going to be critical points in the market where things are going to begin to happen. Okay, you can still continue to scalp, but do not get too caught up in the 4 hour, the 1 hour, and the 15, right? And for one last example, we're going to do the USD JPY. Same thing guys. Okay, it's at a point right now where it looks like it's set to reverse. I don't think I could use the fib expansion on this one to give myself any clean read. Right, from the last swing low. So at this point, like I said, no fib expansion on this one. We do have a nice diagonal support line that's coming on the support, that's coming on the USD JPY. I myself can still see it going down a little bit more, right? It hasn't really come down to that real low that it hit before, the $1.02 mark, right? So we can still see that low here before it can bounce back up. Okay, so at this point right now on the daily chart, this looks like this is just another retest of this line here for it to just continue to come back down. So guys, like I said, the market is in a place where the daily chart and the weekly chart is going to be your friends, because we don't know what's going to happen within the next coming months, right? The way you use the fib expansion, you guys saw me use it on the Euro USD, okay? And I used it on the daily chart. When I jumped up there, every single point in your Fibonacci line is a confirmation of a support or resistance line, okay? So if I go up another time frame, you'll notice that my 1618 line in the fib expansion is the top of a trend line on the weekly chart, okay? And that's from the last swing low. Where was our last swing low? Our last swing low was basically around the time when we gapped at the $1.05 mark back in January 2017. So if I circle that, that's right here, right? This was the last significant swing low right here. So I drew the fib expansion from there, and it gave me this high here, right? So if I had drawn this expansion before, this would have been a good indicator to tell me that this market was going to do this bull run right here, right? But I didn't draw that expansion before, so that wouldn't give me a confirmation or a nice confirmation to say that it was going to do this bull run right here. What it is giving me an indicator though is that the market is now exhausted to what we call the 1618 line, and it's to a point where the numbers need to reverse before they can continue on, right? So we might see a small reversal, possibly back to this line, before the market could maybe continue off and head up into the $1.35 mark where it was at back in like 2014. That's still possible. We can still see dollar weakness, guys. Don't count it out, right? When I say the markets are going to reverse, I'm not getting hung up on that idea of it reversing, right? So I shot 5 minutes for the first half of the video. You guys got the Zoom stuff. Each one of us in the group, I'm positive, trade one of these pairs, right? I haven't gone to any pound pair, but the same thing with the pound pairs, guys. If I'm on the daily chart, the pound pair is at a position where it can be looking to reverse, okay? Same thing, guys. Keep an eye out for the bigger time frames, because this is the point where those who have the 1 to 50 leverage in their accounts, these are critical moments where you can capitalize and grab a lot of pips, where you can see a lot of growth for a smaller leverage account. All right, God bless you guys. We're going to do a Q&A on where and when to use the fib expansion and the fib retracement. At this point, we're probably not looking for any retracements in a daily trend, right? Literally, the fib for this market to come back to a 1618 line now, to come back, to a 50 line now and continue going on, I really don't think that's what's going to happen. All right, unless this market has now geared up for a significant bear run that's going to take the US dollar into places we haven't seen in about like maybe 6 years, right? We'll see. We don't know, right? But at this point in time, guys, we're going to play it the way we see fit. And the way I see fit is to keep your eyes on the monthly, the weekly, and the daily, right? Especially because it's the beginning of the year. And the scalping stuff, be careful with it. At this point, like I said, everybody should have a portfolio that if you're choosing to scalp, $10 a day. And if you're choosing to do long-term trades, this is a good time to begin to swing. Okay, guys? I'll see you in the next video.